Welcome to Prosperous Real Estate Investors Network in cashflowbox.com. In this short presentation, I will cover with you the creative real estate investment strategies utilizing our private money. Here are the lists of topics that would be covered in this presentation. I would go in detail on how to invest in real estate using private money. I would also cover with you a real scenario using this strategy. And then I'll also talk to you about qualifying for the private money and then advise you on how to get started today. So let's talk a little bit about what is private money financing. For most of you who are familiar with it, this may be repetitive, but for those who are wondering how private money financing works, here are some thoughts on it. All real estate loans are secured by collateral, conventional or private money. So the collateral is the real property or the real estate that you're purchasing. Now most conventional loans are also what we call that they are very much dependent upon your credit, and they are very much recourse loans. That means if you default on them, there is a good chance that the lender will come after you. For most of our private money loans, they are also recourse, but there are some private money financing available to you that is totally non-recourse. That means in case you default on the loan, your credit, your other real estate would not be tagged. In a typical conventional financing, let's just say we take an example of a $100,000 property. The market value of the property is $100,000, and that property is being sold to you at $70,000 sales price. If you go purchase the same property with conventional financing, regardless of the equity in the deal, the conventional lender will require you. At this time, this presentation is being recorded in 2009, that the conventional lenders are requiring 20 to 30% down on conventional loan. So you're purchasing a property that already has 30% equity, but your conventional lender is requiring you to put additional 30% down. That is not the case with private money financing. The private money lenders look at the equity in the deal and they utilize that equity as your down payment. So in this case, a $100,000 property that is being purchased at $70,000, there will be no requirement of down payment. The down payment is the equity in the deal. Another problem with conventional financing is that if you are purchasing the same property, the $70,000 property that we are using as an example, if there is a $10,000 rehab to put the property back up together, you most likely have to come up with that money yourself. However, in private money loans and hard money loans, the rehab cost could be included into a loan. And in addition to that, your financing and loan costs and closing costs could also be rolled into the loan. So you have one loan that covers it all, and you don't have to use any of your money. As most of you know, that right now it is very hard to qualify for a conventional investment property loan. In fact, the underwriting guidelines have become so strict as far as the real estate investment properties go, then most investors can qualify for conventional loans. That is not the case with the private money lending. In fact, the private money lending is designed for real estate investors. Since it's driven by the equity in the deal, the underwriting guidelines are not even close to be strict as they are in conventional financing. In fact, most of the guidelines that require real estate investors to not be qualified for conventional financing, like tax returns and like not utilizing the rental income of the property as an income source, that's opposite in private money financing. Most of our private money lenders do not even ask for your tax returns. Let's look at a typical income property that would be purchased utilizing the private money in our strategy. There are a couple of other presentations that are recorded that go in detail on buy and hold strategy and also buy and flip strategy. But on this slide, I am going to cover with you just a basic synopsis of how we put the deal together for you. We will look for this particular example. We'll look at the property that would be purchased, or the purchase price of this property would be at $35,000. The rehab cost to put the property back together will be about $15,000. The finance cost, closing cost, rounded up to about $5,000. Now you got a total acquisition cost of $55,000. But here is where it gets interesting. The market value of the property, or after repair value of the property, is $100,000. So really, you're buying the property at 55 cents on a dollar. The hard money loan that would be given to you, or private money loan, would be at $55,000. You would have 45% equity in the deal. This is also an interesting point about all the deals that we bring to our investors. The monthly rent is always 1% or higher per month of the after repair value. So $100,000 market value, the rent got to be $1,000 or more. We call it a 1% rent to market value rule. Because of these rents, and that's why we only focus on the markets where our investors can get this kind of return, you're looking at monthly net operating income of between $200 to $500, depending upon the deal. We are only able to do that in the markets where actually numbers work. In this slide, we will cover with you what are the qualification guidelines for private money and hard money loans. First of all, there's a minimum credit score requirement. As of today, the credit score that is required for hard money loans or private money loans that we bring to you is 640. There's also a minimal requirement of having liquid assets or cash at hand. Now, please keep in mind that the lender is not requiring you to use your money, but they will love to see that real estate investors who want to acquire these properties have between $10,000 and $15,000 of liquid assets. Now, in case you are looking at it and saying, I don't have that kind of money, you do need to contact us, because we have a couple of other creative ways to assist you with the liquid assets. It requires you to fill up a simple 1003 mortgage application. And once we have all the package together, we submit the package on your behalf to our private money lenders, and you are given, based on all these three things that we listed, a credit line, and we are seeing the credit lines between $100,000 and $2 million, depending upon your credit score and depending upon your liquid assets. Now, for those of you who have been sitting on a fence for a long time and have looked at a lot of these opportunities and have wondered what is a good time to get started, the answer is today is a good time to get started. The quicker you take action, the faster you are on your way to achieve your dream of financial freedom through investing in real estate. The process is simple. First, contact us so we can assist you and get you pre-approved. Once you're approved, you will be given an opportunity to reserve properties. Okay? The wholesale property section on our website is reserved for pre-approved investors only. Once you reserve the property, you will be given 14 to 21 days to conduct full due diligence. You are given all the resources available that you will need to conduct that due diligence, from property management company to the title company to the insurance agent to the lender to the rehab contractor. All are brought to you. You just verify the information that is provided to you and decide that if you want to buy this property or not. The deals close within 21 to 30 days after you have conducted your full due diligence, and that's how you get started on your way to financial freedom as a real estate investor. Thank you for taking time out of your busy schedule to listen to this presentation. I encourage you to give us a call today. It's 702 area code 371-8838, and please bookmark our website at cashflowbox.com. Have a prosperous day.